Great. Thank you, Stephen. Glad to be here. Thanks for having us. Glad to be with you folks tonight. Hope our time is productive and everybody enjoys our time here today. My name's Bailey Blasdel. I kind of work more front end with the people, with clients with Midwest Corporate Credit, helping people on the front end, answering questions, kind of figuring out what product's the best fit for that person's specific situation, kind of helping them build business credit and implement some of the strategies that we're going to be talking about with you guys tonight. Mr. PK Patel here works more in the processing side, dealing directly with the banks, kind of on the back end, and building the different banking relationships and working on adding new products that we then vet with the different lenders we work with and then bring to the clients we work with that feel a need for it. So before we kind of get into our spiel tonight, kind of wanted to learn a little bit more about you guys, kind of take the temperature of the room a little bit, if you don't mind. So by a quick show of hands, how many folks are currently buying and rehabbing or holding real estate? Awesome. And anybody focused on doing more wholesale deals or moving contracts? All right. Anybody have any other businesses other than real estate? No, pretty much all real estate.
You know, there's some ancillary businesses out there.
Yep, there are. So.
Practice, and his wife has a salon, and I believe I have an acupuncture clinic.
Okay, cool, great. Yeah, we work with a lot of different business owners, not just people in real estate. And then
Will has a contractor's license.
I'm sitting from a contractor too.
Okay, great. Yeah, we work with people from all different kinds of business backgrounds and different companies, startup companies, established companies. We do a lot of work with real estate investors. Our company is actually started by two real estate investors that were looking for funds for their deals about 10 years ago, so we can talk about that as well. But basically, kind of what we're going to go over tonight with you guys, like Stephen said, is we're going to cover what corporate credit is, the different kinds of corporate credit, why it's important to have and build your corporate or business credit, and most importantly, some different strategies and tools on how to build it and how to get the most out of it. And we're going to go over some stuff that other people are using right now to build, support, and scale their companies. Does that sound? And at the end, we'll open it up to questions. So if you have any questions, please write them down, run them by us. We'll be glad to go over what we can for you. And then we'll offer the opportunity to take some next steps with us and get started building your business credit if you feel it's a good fit for you. Does that sound fair to everybody?
Yep.
Okay. So can we pull? Well, we're going to switch our screen to the presentation we put together here, and then kind of go through this with you. So basically, Midwest Corporate Credit was, as I said, founded by two real estate investors that were looking for funds for their deals back in 2011. We work with about a little over 1,000 clients per year, and the presentation should be coming up there. Do you guys, is that loading yet on your end?
We see it.
We see it. Can you just make it full screen, please?
Okay. Is that better?
It's not full screen.
Hit F5.
F5.
Okay, anyways.
How's that?
It'll work for you.
There.
Nope.
Looks like it's coming.
It's coming.
All right, there we go. You're on.
Excellent. All right, cool. So Midwest Corporate Credit, consulting company, work with real estate investors, other business owners.
Yep.
It's black.
What's that?
Black screen.
We can work with how you had it previous to this.
It's okay.
It blanked out on us.
How's that?
There we go.
That's good.
We can work with that.
Okay. All right. Cool. Sounds good. So covered most of this. We specialize in unsecured revolving business credit products that will not report to personal credit as long as they stay in good standing.
It's not going to be a slideshow. We'll just have to deal with it.
Yeah, no, that's fine. That's fine. It advanced the slides on y'all's side, right?
Yes, sir.
Yeah.
Okay, cool. All right, great. That's fine. So yeah, we work with 1,000 clients a year, give or take. raised over $250 million for small business owners since the company started. We're named one of the fastest growing magazines by Inc. magazine. They do probably Inc. 500 and Inc. 5000 last few years. A+ rating with the Better Business Bureau. Here's some quick testimonials of what some of our past clients have said about dealing with us. This lady was actually right out here in the area. She decided to stop by our office and sit down and talk with somebody, and ended up getting set up with a $1 million line of credit to go out and buy and rehab properties with. So that she was really happy with that, and how that worked out for her. It's another gentleman we helped out. These are all real estate investors, I believe most of them here anyway. Basically, he was, as you can see, not a fan of working with banks and trying to get some funding for his company. He had some flaws on his credit. We helped him work through a lot of that stuff and then put himself in a position to get the most out of building and starting his business capital lines, business credit lines. This is another lady that we worked with last year. She got unsecured business credit for a restaurant and really helped her with what she needed, and we're helping her grow her credit as well. One of the most important things for real estate investors, of course, is having access to funds. I'm sure you guys would probably agree. Having the deal is great, but if you want to maximize it and actually close on it, buy it and hold it, or buy it and fix and flip it, you're going to need funds to be able to do that. It can be yours or it can be somebody else's. So we help people get funding for a variety of different business deals that they may be working with. Here's a couple quick examples of results for other clients. $111,000 in 17 days for a real estate investment company in Missouri. You guys can read this obviously here. There's 3 different main products that we deal with for real estate investors. The Unsecured Business Credit. There's a real estate acquisition and rehab line of credit that funds more of the acquisition and rehab side. I'll talk about that here today too. And then we can also do portfolio loans if any of you are holding real estate in a portfolio right now and has equity. So would anybody feel like you can benefit from getting additional capital of $50,000 to $5 million for your company? Would that be of interest to anybody?
Yeah.
All right, just checking. So how do you get there, right? How do you get there? It's a great end result, but what are the steps to get there? We're going to cover a lot of that stuff with you. What you can do now certainly is pay attention and participate. Take action, as they say. Listen is one thing, but take action is another. Play full out. Write down your questions. Let us know if there's anything that you need from us, and fill out an application tonight. Basically, the process is real simple. We'll give you a link towards the end of everything here. You give us some basic information. We look at your situation and credit report, and then we can kind of put together a funding estimate for you so we can tell you how much we think you're going to be able to get on the different products that you may be able to qualify for. So that way you have a reasonable expectation before anybody pulls your credit, before filling out a full application. Does that sound fair to everybody?
Absolutely.
Okay. So I'm going to turn the mic over here to PK now, and he's going to go over some of the next items here with you on building business credit and kind of how it all works, and some tips and strategies and on business credit specifically here.
All right, thank you, Bailey. That was a wonderful introduction. Anyways, my role, guys, is to deal on the back end with banks and other lending institutions, whether they're hedge fund backed, whether they're venture capitalists, or whether they're just regular banks. So the psychology of banking is all the same, and I'm just going to keep it real simple and break this down to you. Most people, when they think of the bank, this is what they see right here, is this banker, right? Lighting a cigar with a $100 bill. Scary guy, intimidating. However, I'm going to tell you how to get right through to him and how to pick his vault, legally, obviously. So here's the key thing. Are you wearing desperation cologne? What does that mean? It means that anytime you act desperate or you seem desperate, red flags go off in the banker's mind. For example, if you wear torn up clothes and beg for change at your local train station, versus if you wear a $3,000 suit, or ladies bust out the Chanel dress and say, you know what, I need change for $100. No one seems to have it, sir. Can you give me $1? And watch how many people extend that dollar over to, because you don't seem desperate. So banking is no different, guys. It's the same. If you're wearing the desperation cologne, you're gonna get declined. Red flags go off. And at the end of the day, the banker, all he's looking for is repayment. Are you able to repay your debt obligation in full with interest? Yes or no? And here's how they determine that. The 3 C's of lending: cash flow, collateral, and credit. So basically with cash flow, they want to see if you have sufficient income to be able to cover the amount that you're borrowing. With collateral, worst case scenario, if you default on this debt, what happens? What can they grab onto? What can they liquidate in order to get their money back? And then credit is basically a reflection of your character and your financial management skills. We're going to talk about business and personal credit here. All right, so since we have you guys here, I'm going to give you some tips to improve your personal credit. And the fact that this presentation isn't loading properly kind of gives away what I'm going to say next. Kind of ruins the magic here, but we'll deal with it either way. So first bullet point says
Just imagine you don't see everything else. Just go.
yeah, imagine you only see the first bullet point.
It's all about visualization, right?
And so real quick story, I wanted to be a comedian when I was growing up, but then after my parents told me that they're going to disown me and banish me from the family, I decided to go into banking, something more reasonable. So this is like giving away my punchlines, you know, and no big deal. It's distracting to me, but we'll deal with it. So first bullet point, it says, do not use personal credit card checks. If you have personal credit cards, you always get these balance transfer checks in the mail. They give you 0% and you pay a small fee, 3 to 4% maybe. And they'll give you 0% interest for 12 months. Well, what happens when you use those is your credit score takes a huge nosedive. Why? Because the credit bureaus are not able to determine what that debt is for. They just see a maxed out credit card on their end, and they're going to punish you for it. So the fact that you use it to rehab a property and you're going to double it is irrelevant to them because they don't know the difference. They think you went to Neiman Marcus and went on a shopping spree, and it's an extra debt load. That's all they see, and therefore it's going to calculate into your FICO score. So you don't want that. Next bullet point is installment accounts are better than installment accounts are better than revolving accounts for the most part. It's just a rule of thumb. This one's not set in stone, but if you're looking to finance something that's a little bit long-term in nature, meaning 6 months or longer, you want to go with an installment loan. If you max out a credit card, it's going to reflect poorly on your credit score as opposed to just getting an installment account. So remember, just get a loan. Don't max out your credit card for long-term debts. Next bullet point is major bank cards are better than store cards because store cards, research has shown that they're actually opened by someone that has a heavy consumer mentality, and they tend to be a higher financial risk. So major bank cards are going to be better for your credit score. Next, this one's gold. Next bullet point. Pay credit cards 4 times a month. So let's say, for example, you have a $10,000 credit card and your monthly expenses are $8,000. So you rack it up to $8,000, and at the end of the month, you write a check and pay it in full. Well, what's going to happen is, depending on when that reporting date is, it could show a balance anywhere between $0 and $8,000, and you don't know when the reporting date is. It could show when it's close to being maxed out. So when that happens, it looks like you've got that card maxed out every single month after month, and that reflects poorly on your credit score. So here's what I recommend. If you're going to spend $8,000 a month anyways, make 4 payments. Every Friday, take it from 0 to $2,000 like you would during that week, and every Friday make a payment for $2,000. and pay it as close to zero as possible. If you do that, there's no way it can report above the amount you have a balance for. So that's going to dramatically increase your credit score, just that one habit. You're not doing anything different, just making your payment 4 times a month. Next one is very obvious. Pay your bills on time. Duh. Well, set up auto pay wherever you can. At least get that minimum payment in on your credit cards, and full payment whatever's due on your installment loan for that month. So that way you're never late, and you're pretty much insured that you're never late. All right, let's move on to business credit. Why is business credit so important? First bullet point there says keeps business debt off personal credit, so your FICO doesn't get negatively impacted. So like we talked about in the previous slide, once you build business credit, all the accounts, at least the ones that we set up on our client's behalf, won't even report to the client's personal credit profile. So when you use them, your credit score won't be affected. Next bullet point says lower scores equals higher rates, fees, hassles, paperwork, and headaches. That's absolutely true. Anytime you have a lower credit score, additional verification needs to be done, and all of that takes time. So you want to keep your scores high, obviously. Third bullet point says long-term financing can be denied on fixed to rent deals. This one is an absolute nightmare. We get clients that call us up all the time. It says, hey, I'm stuck in a 10 to 12% private money loan or hard money loan, and I use my personal credit cards to rehab the property, and now I can't get out of it. How would you like to be in that situation? It's not a good situation to be in, guys, because now he doesn't have any liquidity. He's pretty much trapped in a really nice rental that he has to liquidate in order to get his money back and cash out this 10 to 12% loan. So you want to avoid that situation, and you could do it by building business credit. Fourth bullet point there says build business credit profile to become more bankable in the future. That's absolutely true. It's just like building your credit profile when you were fresh out of college. You didn't have much credit to begin with. You probably just had some student loans, and then you started with some store cards, and you built your way up. It's no different with business credit. We've had a lot of clients that start off with $2,000 to $5,000 credit cards when they're brand new, and then 2 to 3 years later, we talk to them, and these clients have $50,000 to $100,000 limit per account that they started. It's kind of like a seed that grows into a mighty oak. Business credit is no different. The last bullet point there, it says accounts typically report to corporate Experian and commercial Equifax. This goes hand in hand with the previous bullet point of building your credit. All right. Now, here's an actual case study on a client that we helped out. And he was handicapped by his personal credit. So this gentleman started his company in January of 2017, and he used $27,000 in personal credit cards to fund part of his expenses. And he hired us in May of 2017 to help him out. And we showed him how to strategically pay down his credit cards and get the maximum amount of FICO gain on the strategic pay down. The end result, as you'll see, is his FICO score went up 120 points in 60 days. Can you guys see that okay?
Now, zoom in on the bottom right. Yeah, zoom in where it says the zoom. There you go. Keep going.
Good.
Little more. Little
We're
more.
gonna lose the bottom.
All
There we
right.
go.
There you go.
We can,
No, I can
And
just
they can
scroll
scroll.
different slides.
All right. So he had 31 $31,000 in credit card debt when he started with us. And this was on May 5th, 2017, Cinco de Mayo. All right, so here's his scores that day, as you could see, and this will come full circle. And then here's a snapshot on 7/5 of 2017, as you could see. We helped him pay all that debt down. And this is the difference it makes right here. All right, and here you'll see a side-by-side comparison of his scores, just 60 days apart. And average gain was 120 points. I mean, this is the difference between like a B- paper to A paper. Could make a huge difference. 27 grand in credit card debt. That's all it took. So you have TransUnion, Equifax, and Experian on the personal side, but who are the big players on the business side? Here they are. It's corporate Experian, commercial Equifax, and Dun & Bradstreet. Now on the banking side, we don't use Dun & Bradstreet unless you are a big business, meaning you're doing at least $10 million in revenue. That's when DNB comes into play. Or if you're going to go for government contracts, which on the real estate end is not going to apply to you. So what you want to do is you want to focus on your Experian and predominantly your commercial Equifax. That's the 800-pound gorilla in the room when it comes to small business banking is commercial Equifax. Here's what banks don't want you to know.
Zoom in.
All right. So, certain things that are not very widely known are which banks report to which credit bureaus. So, there's certain banks that will report accounts to both business and personal, and certain banks that will not. You want to avoid the ones that will report business accounts to personal credit, because after all, what's the point if you're going to do it that way? What's the point of setting up your LLC and getting these accounts if they're going to hurt your personal FICO score anyways? Next bullet point is there's banks that are that specialize in commercial banking, retail banking, and there's certain ones that are mortgage specialized. So knowing the difference between them, and then this whole slide I could go on for 2 hours, but I won't. So knowing the difference could make the difference between getting approved and getting declined. So a lot of times you get declined, you're likely just going to the wrong bank. Because what you're proposing is that's not their appetite. Also, you can get perpetual 0% balance transfer checks on business credit cards if you service the accounts properly, and we show our clients how to do just that. All right, so I'm going to give you a case study. This is actually one of my balance transfer checks. Let me zoom in on that. All right. Can you guys see that okay?
Oh, yeah, yeah.
All right. So this account I got about 5 years ago, and they started me off with a tiny $10,000-$15,000 limit, and now it's up to $75,000. So they're offering a 0% APR through September of 2019. By the way, this check is from springtime, April, so that would make it about 18 months at a 2% balance transfer fee one time. How would you guys like to get that kind of an interest rate? It's absolutely ridiculous. And this check, you're actually able to write to anybody you want. You could write it to a contractor. I actually wrote it to my own company, Standard Holdings, and deposited it into my checking account.
Yeah, we've got clients doing $300,000, $400,000, $500,000 deals here in the Chicagoland area and around the country using 100% funds from business credit cards, and their overall financing cost total is like 2 to 3% per year.
It's mind blowing, guys. It's awesome. So now you're probably wondering, what did I do with this? Here's what I did with it. I bought this property. It was 100% financed using business credit. So that's just one of my accounts. I've got multiple accounts like that. I go up between $50,000 and $75,000 that offer similar kind of interest rate. So I ended up stacking them together, and I purchased this gem right here on the left that you could see before picture, and got a lot of flack for it. Like, man, looks like a haunted house. Why would you buy that, PK? It's tear it down, bulldoze it. We couldn't because it's got a basement. You guys don't get that joke?
I don't get it either.
No,
Hey, you know what, Bailey? I should have had you drive a bulldozer through this property that's got a basement.
I wouldn't go all the way into the basement, obviously.
But we didn't bulldoze it. It was a diamond in the rough. Okay, so it was kind of in a historic district. This is what we end up doing with it. We beautified it, and look at that. Even the skies cleared up after we rehabbed it.
It's a good real estate investor.
Tommy,
It's a good real estate investor. Make the sky go again.
So
It's amazing what some paint and hardwood can do.
So here's the thing. We ended up redoing the whole thing from top to bottom. This had it had a 6-figure rehab budget. And I'll show you the numbers real quick in the next slide. But I couldn't get any before pictures besides the curb shot that was on the MLS because it got gutted. As soon as we closed on it, within 2 days before I could get there, it was down to the studs basically. So I didn't get a chance to grab those pictures of what it looked like prior to the rehab, but these are the after pictures.
They could probably use their imagination.
Yeah, if it looks like that on the outside, imagine what it looked like on the inside. Plus, I'm afraid of ghosts, so I didn't want to go in there. That's the real reason.
Yeah, we have a historic district where we are right now, actually.
So it's the rehabs in historic districts they can be kind of tough because you're restricted on what you can and cannot do. This particular area, they're kind of loose on what they'll let you do, so we got lucky. So here's what happened. I acquired it for $75,000. We had a rehab budget of $115,000. Holding and closing costs were about $10,000, and we sold it for $268,000 and ended up with $68,000 gross profit. It only took about 13 months, so I still had about 5 months remaining on that 0%. All right, now the 3 unconventional financing tools that we're going to go into further detail about. I covered one with a case study, which was number 1, the unsecured business credit, and then there's 2 more that we have available. What I'm going to do is I'm going to hand it off to Bailey now, and he's going to go into further detail about the rest of the tools that you can use. So
Great.
There you go, bud.
Thanks, PK. So you guys liking this stuff so far? Good info? All right, good deal, good deal. So we kind of talked about the business credit cards already. PK went over that. The second product that and I can cover that more in detail if anybody has any questions or whatever. We can do a one-on-one call. I can answer your questions here in the group if you like, however you want to do it. Second product that we provide for active and experienced real estate investors is the Real Estate Acquisition and Rehab Line of Credit, or the REALOC we call it. And then the third is the rental portfolio financing if you have property already. So the acquisition and rehab line will cover the acquisition and rehab of single family properties. And I'll get more into that here. So quick recap on the unsecured business credit. These are business lines of credit that are established in the business name. They're approved with no security, no deposit or collateral. Of course, they'll stay open for decades if you take care of them the right way. They will not report to personal credit as long as they stay in good standing. There's no restrictions on use. Nobody's looking over your shoulder, seeing how you spent the funds. And they typically come with 0% rates on purchases and or balance transfers for the first 6 to 12 months. After that, they normally adjust to about 10 to 20% or so, depending on the strength of the guarantor's personal credit. But we don't want you to pay those rates. Again, there are usage patterns and metrics that banks like to see that we've learned by using the cards ourselves over the years, that we've been teaching people, that we can teach you guys too. That if you hit them, a lot of our past clients, for example, as PK was saying, have doubled and even tripled the initial approval limits on their cards within the first 15 to 18 months. Up to $50,000, or even I know people with $150,000 limits on one card. And then you can also get the additional promotional rates through those balance transfer checks, like PK was talking about as well there. That's really the end goal. We want to teach you guys how to build business credit, hit the good metrics these banks like to see, show yourself to be a good credit client, and they will reward you for it. I think I just covered all this, getting ahead of myself here. So yeah, they're Visa, MasterCard type cards, are not like vendor cards or business cards or report to personal or anything like that. For pretty much all industries, including investors that are doing fix and flips, we do them for startup companies and pre-revenue companies, as well as established companies, of course. And then you can get the additional promotional rates. So could any of you in the room see a benefit of having $100,000, $200,000, $300,000, $400,000, $500,000 in unsecured business credit cards at 0% rates with like a 2 or 3% balance transfer fee? Would that be a benefit to anybody, or probably not?
Yes.
Yeah.
All right, just check it. So what can you use them for? You can use them for startup, working capital. Oh, you know what? PK does his
Zoom out.
PK does his mouse on his computer differently than I do. So when I try to advance the slide and pull it down, I'm trying to send it the wrong way. So we have our Mac set up a little bit differently. So I got to figure it out now, though. So what can the business credit cards be used for? Startup or working capital? When you first get the cards, use them for marketing, for expenses, for travel. If you have CRM costs or whatever, use them to put some more marketing out there. Use them certainly for the rehab portion of your projects. You can buy materials, you can pay contractors, you can invest in real estate, coaching or education programs. And then once you get the balance transfer checks, you can also use them for acquisitions as well. There's some other creative things that you can do too if you want to access the funds earlier than that. We can talk about that as well. Regarding, I think this is going to take us into the next product here.
There you go.
Okay, great. So the next one is the Real Estate Acquisition and Rehab Line of Credit, the REALOC. So this thing is for the acquisition and rehab of single-family homes all the way up to 20-unit multifamily properties. If you're looking to do stuff bigger than that, we do have other lenders that we work with. I think I heard somebody mentioning a couple hundred units a little while ago. That is something that we may be able to help with. You guys are looking for financing for that. We have a variety of lenders, but as you may imagine, most people don't come to us looking for financing for 400,000 or 400 unit properties, but we do have different relationships. So with the REALOC program, you can do new construction. Basically, it works as a kind of like a giant pre-approval. Okay, you get underwritten once, and then you can do deals all year. There's one hard inquiry, and then basically you and your company will be set up and approved, and then you can use the funds to acquire and rehab property. Only the property they need to run the numbers on the deal and then figure out how much they're going to lend you on that specific deal. So you're not going to have to keep sending in financials every single day or every new month if you're working with hard money. I imagine probably some of the folks in the room there have experience dealing with hard money lenders, and as I'm sure you know, every single time you go out and need funding, they're going to run your credit again. They're going to ask you to send an updated bank statements and updated financials. So you'd probably rather be out looking for deals and talking to sellers than working with paperwork and trying to qualify for loans. Am I right? Certainly the benefit there. They're approved without existing collateralization. So they're not going to lien your current property. There's no deposit or collateral. They just get a first position lien, of course, on any deals as you're doing them. The lender also offers 30-year fixed landlord loans. So if you buy and you want to rehab something and you want to convert it over into a long-term rental, we can do that for you too with minimal headache. On the acquisition rehab side, they'll fund up to 90% of the purchase and 95% of the rehab. You're able to lock in a low interest rate. The interest rates can be as low as 1 point origination and 7.99% APR. Basically, the lender's going to approve you for a certain amount of dollars that they're willing to lend you at one given time. And then as you do a deal, each deal becomes a 12-month loan with a 3-month extension for 1 point. And that'll be at whatever rate they end up giving you. And again, just like with the business credit cards where we do the funding estimate for you, you send us a couple bank statements, send me a real estate track record, send me a credit report. We'll get a conditional approval from the lender, and they'll be able to come back and say what rates and what amount and whatnot they're looking at giving you. Obviously, the better credit you have, the more experience you have, the more liquidity you have, the better rates and whatnot they can end up giving you. You're able to do rapid fire acquisitions. No worry about having to constantly qualify all the time. We can get a pre-approval or that conditional approval done for you in minutes. It allows you to 5 to 10 times multiply your liquidity. Okay, so basically the way that it works is they look at how much liquidity you have, and then based on your experience and your credit, they approve you for this line of credit equal to 5 to 10 times whatever your current liquidity is. It can go up to $10 million. So just curious, is there anybody in the room that could see a benefit in not having to qualify for hard money all the time and getting something like this set up so that you can do multiple deals and focus your time on doing deals? If that would be benefit to anybody, let me know. All right. So what do you need to qualify for this? You need decent credit, 680 ideally. If a little lower than that, let me know. We could talk about it. We're looking for 3 deals experienced in the last 24 months between fix and flips and current rentals. It is for active and experienced real estate investors. They're looking for minimum $50,000 in liquidity. What can be used for liquidity? They want to see end-of-month bank statements. We'll ask for the 2 most recent bank statements you have. And as you see on the screen there, we can use business and personal checking and savings accounts. IRAs, 401ks can be used, pensions, annuities, life insurance policies with a cash value, stocks, bonds, mutual funds, CDs, money markets, 1031 exchange funds, gift funds, and even home equity lines of credit can be used as well. So I'm going to go over a quick case study with you guys of another client of ours, a client of mine specifically here in Chicagoland, that just used these different products in conjunction and exploded his real estate portfolio in a really good way. This gentleman owned a commercial cleaning company, home-based commercial cleaning company here, and that's why I was asking if anybody else has any other businesses, because when he first came to us, he came to us for funding for his other business. He wanted to increase his reach. He wanted to hire on more people so he can do, clean more offices and stuff. So he first came through, got about $158,000, if I remember right, in his first round. Came back again a little while later, went after the larger business lines of credit, that more traditional type of product for other companies, and he ended up getting close to $450,000 there. Total, he got $600,000 in unsecured, non-person reporting business credit lines between business credit cards and business lines of credit. He used those funds in conjunction with the $850,000 he got through the REALOC, the acquisition rehab line of credit product, to scale his business, to grow his cleaning company, and also he basically loaned money from his cleaning company to his real estate company to help pay for down payments and stuff. and then use the acquisition rehab line to cover the rest of the funds on the acquisition and the rest of the funds in the rehab. So he was doing deals 100% using the bank's money. He was buying small multifamily properties. He was rehabbing them. Once they were rehabbed, he'd convert them over into long-term holds. And long story short, he went from 9 units to over 90 rental units today in the span of about 12 months.
It just sounds too good to be true.
Come on, guys, that's the punchline.
I heard a comment, it sounds too good to be true. I know, it kind of sounds crazy and ridiculous, but this is the God's honest truth, what this gentleman did. He actually expanded a little bit too faster than what we recommended. We tried to get him to put on the brakes for cash flow and, just kind of being smart and whatnot, but he wanted to pull the trigger, and as far as I know, he's still doing great and just kind of managing his cash flow and working on things, getting things more stabilized right now. But he did very, very well. Part of what really helped him is he already had an established business outside of real estate that was doing, I think they were doing almost $2 million a year when they first came to us. So, that really, really helped him get the leg up with both the business credit cards and also I got $450,000 in the BLOC program, the business checkbook line of credit product. I'm not going to really talk about that a whole lot right now, but that's another product we offer too. We can do for real estate investors actually up to $50,000. But in his case, he had a company that's not associated with real estate. He got one approval for 180, another one for 20, another one for like 150, and then he used the acquisition rehab line to cover the rest of the funds for the acquisition. So he had access to people that had specialized knowledge and tools and strategies, and then he took action and put them to work. And if you'd like our help doing the same thing, let's have a conversation. So quick 60-second recap of kind of some stuff we went over tonight here. The unsecured business credit cards, and we'll open up to questions here in a minute. The unsecured business credit cards can be used to fund the rehabs, the marketing expenditures, potentially acquisitions as well, while at the same time building your business credit and protecting your personal credit. Imagine if you have, and the banks we work with on the business credit card side, these are different regional, national, and local banks that we work with around the country. We've basically figured out which banks actually offer these kinds of products to real estate investors, business credit products that won't report to your personal. We know what bureaus the different lenders pull from in a given area, so we can look at your credit report and kind of strategize which lenders are going to give us the best chance for approvals and then attack it that way. So we covered that. We covered the real estate acquisition and rehab line of credit that funds up to 90% of your purchase, 95% of your rehab. You get approved once, do deals all year, great rates, great way to scale your business. And then also mentioned we also do rental portfolio financing. And if you have a portfolio and you'd like to either maybe get a line of credit, non-recourse line of credit potentially against that, or pull out some cash for refinance, we can speak with you guys about that as well. So what is the kind of investment necessary to get started if you're interested in either of these products? First off, we're a 100% success-based company. There's no upfront application fees or processing fees or anything like that. Business credit cards, we charge a one-time success fee of just 10% of the initial approval limits that you get. Most people will use one of the 0% on purchases cards to go ahead and pay the invoice. So you can pay us with money that you are getting, so it's no money out of pocket. You can finance your investment at 0%, and you very well may be able to write it off as a consulting fee on your tax returns too. We can provide you the additional consulting at no additional charge, and that's regarding when to ask for credit limit increases, kind of how to talk with the lenders so you get the best chances for limit increases, how to work with them, the metrics that they want to see in order to feel comfortable giving you those balance transfer checks, so that you can really get the most out of them. And there's no fees whenever you get additional limit increases or anything either, only whenever you establish new accounts. For the acquisition and rehab line of credit, there's just a one-time success fee of $5,000 when the account is set up for any accounts under $1 million, and $7,500 on anything over $1 million. Not too long ago, we were actually charging 1% of the approval amount, so we're giving folks a discount right now. And we wanted to do something solid for your group here, if anybody's interested in that. And again, everything we do is performance based. You want to have a conversation, talk about your specific situation. Great, let's get on the phone and figure out what you need and how we can help. And if we're a great fit, great. If not, that's okay too. No harm, no foul. You can fire us if you want.
Why would you want to?
Well, why would you want to? So basically, you got two choices, folks. You can do it on your own, or you can do it with us, and we can do it together. You can work with professionals that are experts in doing building business credit and helping people scale and grow their businesses. If you keep doing what you've always done, you get the same results, of course. Getting access to unsecured business credit options, of course, helps you leverage more of the bank's money, which, if you're using less of your own capital, it decreases your risk and increases your return on investment. Action does get rewarded as well. PK has put together a free gift for anybody that applies within 24 hours, which is a cash flow analysis tool and a personal wealth calculator. So you can basically, you got a calculator, you can put the numbers in on a deal, it'll calculate your cash flow and some important metrics to help you see the deal better in a quick way, and then also a personal wealth calculator on what you can do to get to where you want to be. You basically figure out where you want to be. We can break it down and kind of help you figure out financially how to get there.
You're breaking up.
Can you hear me now?
Yes.
Okay. Might just have been a temporary internet connection, or maybe I need to talk more towards the mic instead of lower. So what's the next steps? Go ahead and visit the link here in order to fill out an application online and get started. It's applymidwest.com/ECREIA, and it is case sensitive. The ECREIA does, for some odd reason, need to be lowercase. We got our tech guys looking into that, but they've never seen it before. But yeah, make sure you put in the ECREIA lowercase, and that'll bring up a quick application. You can actually do it on your phone right now. It is mobile optimized. If anybody wants to go ahead and just do this while we're on the phone, pretty simple and straightforward. We can walk you through it, but you fill out some basic short application, send us some basic information. I'll go ahead and review everything. We'll put together a funding estimate or conditional approval, put together a complimentary consultation for you, and a custom game plan for your specific situation. Typically, we can look over everything, get back to you within about 1 business day. If you want to move forward, you would sign some simple and secure online application and engagement letters, and then we get to work for you, getting you the capital that you need for your business. So at this point, we can go ahead and open it up for questions. Here's my contact information and the link there. And if there's any questions, we'd be glad to go ahead and take those and cover anything else that we can for you guys this time. How's this been so far? Have you guys gotten some good value from this?
Absolutely.
Yeah.
I might go fund a few deals.
All right, cool. Be glad to help. We'd be glad to help.
I gotta say, I'm probably the least experienced person in the room, and I'm just sitting here going, damn. So I'm waiting for the other shoe to drop. I'm waiting to find out.
Where's the catch?
Yeah, what's the catch? Because it all just sounds really fabulous, and I hope it's just as fabulous as you say it is. But I'm 57 years old, and I'm very skeptical, and I want to know what the catch is.
I can totally respect that and totally understand where you're coming from. There is no catch, guys. We're straight shooters. We want to treat people like we want to be treated. I just had a conversation with the guy on the phone an hour ago, and I was like, "Look, man, it is what it is. He's in a little bit different situation. He had some misconceptions on some things, and I had to straighten him out. I'm like, look, I mean, your situation is what it is. I'm here to tell you what you need to hear, not what you want to hear. So that's just kind of the way that we operate. We've got a great reputation online. We, and with local people, we certainly want to keep that. Do your homework, check us out. We're the real deal. But yeah, there is no other shoe to drop. Last thing we want to do is tell you one thing and then do another. If anything, we're more conservative on the funding estimates that we do for people because we want to give people a reasonable expectation. But yeah, that's it. We're a success-based company. If you want to move forward, you fill out the paperwork, and then you pay us once you get approved, and then we continue to help you grow and with whatever you need, however we can.
Wonderful.
So I have some questions, Bailey. My name is Tina. I came in a little late, so I'm at a little bit of a disadvantage. But my first question is, so I mean, are you guys mortgage brokers? Is that what you are? You basically look at a person's financial portfolio and what the needs are, and you shop around to try to find financing for that particular business or individual? I mean, is that basically what you guys do?
Kind of, but not exactly. So what you kind of described is when you say you shop it around, I'm kind of partial to terms and I try to speak very clearly. We do not shop you around.
I think I'm wondering, Bailey, where do the funds come from? Are you a private money lender? Are you a hybrid lender? Are you partnering with those folks? I mean, who's
Got it.
Who's the money?
Got it. Yeah, understood. Great question. So we're a consulting company. So the money comes from the lenders that are actually lending you the money. So we do all the homework. We're looking at tracking the lenders' underwriting data, which lenders actually work with real estate investors. A lot of them don't. A lot of them don't work with startup companies.
So are you actually working with institutions, or are you working with private individuals?
I should probably answer that.
Okay. Yeah, PK is going to answer that to clarify.
All right. So we've got a lot of different money pools that we work with, and a lot of them are backed by hedge funds. For example, one of the companies that we work with just got a $100 million endowment from Goldman Sachs. So it just it'll depend on the actual deal on where we end up taking it. Sometimes it's a good bank deal. Other times it is good for one of these larger funds. Sometimes it's good for a smaller fund. It just depends. So.
And then your fee based on an approval, or your fee comes into play once we actually use the funds. So, when do you get paid?
Great question. So on the Unsecured Business Credit Program, the fee is due when we set up the accounts.
After you're approved.
Yeah, and.
But we haven't used any of the money.
Correct. And you could use it pretty much at your leisure on that side. And then same thing with the business acquisition line. Once we set it up and you have your exposure limit and you have your line amount, that's when we bill you. And our fees are payable within 7 to 15 days after the account is actually set up.
Okay, and I have one last question. I don't want to dominate the conversation. My last question is, it looked like on the slide that the credit is solely with the business and that your personal credit is not coming into play at all. I'm just wondering how in the world that is possible. If we have a fairly new business and that business really doesn't have any credit, I mean, I can walk into Lowe's tomorrow and get a credit card in the name of my business, but my personal credit is still on the line for that. I mean, it takes years to establish business credit. I mean, true business credit in the name of your business where your personal stuff is not coming into play. And I'm not being argumentative. I'm just saying my husband and I are working on this diligently, getting things recorded and things like that. So I'm just wondering how just miraculously you guys can make that happen.
Great question, Tina. I'm glad you brought that up. And yeah, to clarify, your personal credit does come into a factor. It's absolutely a factor. It's just, I'm glad you brought that up so we can clarify. Yeah, whenever they set up the accounts for you, your personal credit is absolutely going to be something that they're going to consider. But as long as you keep the accounts in good standing, the accounts are not going to report to your personal credit. So on the business credit card side, for example, all the lenders do have their own underwriting process. Like, you're going to send me a copy of a credit report. We're going to review it, and we're going to use that to put together the funding estimate. You send me the credit report because we don't want there to be any inquiry. But when the lender gets the file, they are going to run your credit. They have to. They are going to want to look at that. But as long as you keep the account in good standing, the balance, the limit, the account itself is not going to show up on your personal credit report. And you're absolutely right. Yeah, you normally have to be in business several years or doing millions of dollars, typically in a lot of cases, in order to be able to qualify for business credit products that are solely on the business. Basically, the business would have to be able to survive without you. So
So is there reporting that's getting, are you guys reporting to Duns and Bradstreet? I mean, is any of that happening on the back end, or is it just maintaining, your accounts to prevent your personal credit from continuing to come into play? Does that make sense?
I think there's two different parts of the question that you're asking. So regarding keeping the accounts from reporting your personal credit, just pay your, make at least your monthly minimum payment when it's due. Don't violate the terms. So keep the accounts in good standing. They're not going to report to your personal credit. So that won't be an issue. The other thing you brought up was regarding Dun and Bradstreet. Okay, so these lenders typically, a lot of them do typically report to Corporate Experian and Equifax Commercial. Those are actually the two biggest, most important business credit bureaus for real estate investors. Dun & Bradstreet can come into play if you're looking for government grants or you're dealing with some large vendors and different things. Sometimes larger vendors may consider Dun & Bradstreet, but if you're talking about getting a bank loan or getting something like that, funding, banking products, typically banks are not going to consider Dun & Bradstreet, at least not in our experience with what we see. Now, one of the things that we do for our clients is if you pay your invoice on time, I believe we're still sending out those Dun & Bradstreet vendor lists to people. So if you want to build up a Dun & Bradstreet profile, hey, knock yourself out. We'll give you a bunch of lenders, or a bunch of vendors rather, that report to Dun & Bradstreet. It's just these lenders typically don't. So, we can plug you into companies that'll do net 30 or 60 or 90 or whatever for you so that you can start building up your D&B profile. But in our experience with real estate investors, it's just not something that that people really need to do. I know, people have probably gotten calls from Dun & Bradstreet. That's a whole nother conversation. But it is what it is. But we'd recommend you focus on Corporate Experian and Equifax Commercial. Those are going to be the ones that the business banks are more concerned about. Does that answer your question adequately?
It does, thank you.
My pleasure.
Should we switch back to the camera mode?
Probably so.
All right. There we go.
Hold on. Thank you, there you
And there you guys are.
Hello again.
We can see you again. Yeah, good deal.
We wanted you guys to have that link. So you have the opportunity to copy it down. So we left it up there for a while.
So what other questions do y'all have? Any other? What do you got?
You guys got one?
Go ahead.
I have a question.
Sure.
All right, let's say I'm gonna put a scenario, because I'm a scenario guy. I like to put things out as what may happen.
Sure.
Let's say I saw you said you wanted 3 deals. Let's say an individual doesn't have 3 deals. Let's say he has 2. Could he bring a partner in and they form an LLC and this thing come into play where they form this thing up? And let's say an individual has an 800 plus credit score with multiple thousands of 401k money and everything else. Would that come into play? Could that be done?
Absolutely. Yes, it certainly can. You're talking about the Real Lock program, the acquisition and rehab line of credit. The credit cards don't require you to have any deals, but yeah, if you have a situation like that, you've got 2 deals experience, somebody else has 1 or more, or, they've got more liquidity, you can absolutely bring 2 people together to have both of you get approved for the acquisition and rehab line of credit. I just did a deal where we had 4 partners. It's more paperwork and more work and stuff on our end, but yeah, it can be done.
That was my question.
How long have you guys been in business?
2011 is when the company was
Okay.
formed. How long has your group been meeting?
A year this month.
Year to the day.
This is
Oh,
our
cool.
anniversary.
Hey, great! Congratulations. We're the anniversary show.
You're the anniversary show.
We didn't think about that.
Yes.
Great. Thank you for the honor.
We appreciate everything, guys.
It's regarding the example y'all gave of the gentleman that had, I forget how much, $27,000 to $30,000 in credit card debt using his personal credit for business. How did you all help him out of that as far as like building his credit up in that short amount of time?
Actually, I'll take that. question since that was actually my client. Someone referred him directly over to me, and I'm the one that helped him out with it. So basically, what we did was we asked him. He used the balance transfer check, and he had the funds in his account to be able to fund the whole thing.
To pay down his cards.
To fund the startup, he had the money in his bank accounts, but he wanted to use a balance transfer check and stay liquid. So what I did was I told him to use the funds in his account to pay it back. Just eat the 2 to 3% fee that he just he kind of just chalked it up as a loss instead of dragging it out the entire 12 months. I had him put it all back, and basically that helped bring his credit score up, because he had one card that he practically maxed out. I mean, it was at 98%. He took it, and after the fee got tacked on, it was at 98%. So that's what caused all the damage to his credit score. And then once that was back and reporting, it was in good standing again. It wasn't close to being maxed out, and he was up to A paper. So after that, we put him through funding so that we got him business credit card accounts that wouldn't report, and that basically put him in a situation where now he could leverage these funds without his credit score taking a nosedive like that.
Okay.
Does that
So
answer
he
the question?
paid off his own credit card.
Correct.
Okay, so you didn't help him pay down his credit cards. He had the money already to pay his credit cards down.
We didn't loan it.
He had just opted not to do that for some
Just
silly
thinking
reason.
maybe we loaned him the money.
Yeah, we didn't loan him the money, but what we could have done if he didn't have the money is we could have suggested that he applies for some kind of a debt consolidation loan and pays that credit card off right away. So in this particular scenario, he had the funds. If he didn't, that'd be a different story.
Right.
So what some people have done in the past in similar situations is they'll go get a personal loan, or they'll even get a couple business credit cards. They come with balance transfers. The idea is to get the usage, to pay down the usage on the personal credit cards. You want to get it off the revolving side. So PK looked at his credit cards and looked at how much he owed on the different accounts and what the different accounts were, and he put together a custom pay down plan for this person. So he told him, hey, you have whatever he had, 28, 30 grand, deploy this much to this card, this much to that card, in order to help the client get the biggest bump on their scores, so their credit report looked as healthy as possible to the lenders.
Right.
And some,
Right.
So could you actually take, because what you're saying is you could take and do balance transfer from your personal to some business credit cards?
yeah, so some people,
I'm misunderstanding.
so if what some people have done in the past is we'll do like a 2-step program for them. Let's say in your area we've got 8 different lenders that could potentially offer unsecured business credit cards, but maybe your usage is a